Welcome to Binex Investment Group. In this video, we are going to be talking about the power of trading only one trade setup. So we'll use a real market example which you can as well replicate in your trading. But before we go through, make sure you subscribe to this channel and check the notification bell icon so that you won't miss any of our videos. And before we go any further, please be careful of scammers who comes in the comment section with phone numbers or WhatsApp numbers. We don't do so. If you want to connect with us, please use the link that I've put in the description box below that will link you to our Telegram channel. So in this video, we are going to explain this in two parts, which are the power of focus in trading. Then the other part will be an easy pattern you can focus on. So if you want to fully understand everything that we'll talk about, make sure to stick up to this part where we'll actually give you real market examples of trading only one pattern. So trading is a very delicate business. By that we mean it's very sensitive. One mistake can wipe away 5 years work in a matter of minutes. And if you have been in this business for quite a long time, you know that you may actually try to tune your lot sizes, and that is when you can wipe away everything that you have worked for. So before we talk about the one easy setup to focus on, we need to first emphasize that there is no forex holy grail. I've seen several traders actually jumping from one thing to another, trying to find that only one setup that will give them a lot of money at once. This is due to the internet, which makes us believe that there is always something that will allow you to risk it all and make a lot of money at once. This is false. So the only thing that will guarantee you to make money over a series of trades is focus. And focus put on one setup is powerful than 100 market makers put together. So someone who actually focus on only one pattern for the next 24 months, 18 months is very powerful in the market, because the market is limited in terms of ideas of trapping, being manipulated, and so forth. So you need one setup that you fall in love with, stand by it no matter what the outcome per trade. So how do you actually find the best setup to focus on? Let's see in the next slide. So firstly, you need to learn, right? From there, you attain your own signature trade. By signature trade is the one setup that you are going to focus on. Print it, stick it in your office, or have it as screensavers of your devices and so forth. So on that note, we are going to hold a trading training on the 28th of June, and this will definitely help you if you don't have a signature trade. So let's have a very simple example of what a signature trade is, right? So for this example, we are going to use the easy M reversal pattern. So for someone who chooses this type of trade as his or her signature trade, he needs to know the following notes. So you may as well trade any type of pattern to focus on. We come from different trading backgrounds. Some actually focuses on price action concepts, some smart money concepts, but in doing all those stuff, there are different types of trade patterns that are involved there. So you need to select one. But in that selection of that one particular trade pattern, you need to have information about the time frame of observation. Which time frame do you use to observe the charts to actually get that particular trade pattern? Then procedure of analysis. How do you analyze? Clear steps of how you are going to be analyzing in order to achieve that particular pattern. Then point of occurrence. Which point does this particular occur on in the market flow, right? Then last but not least is the time of entry, which is very, very much important, right? So I'll give you an example of all these stuff on how you actually apply this on an M reversal pattern. So the above notes must be highlighted in your trading diary clearly as this, right? So this is the M pattern blueprint. This is these are the exact notes you should be following in order for you to be trading this M pattern, right? So the time frame of observation, as I've shown you earlier, it will be H1 time frame and with entries on the M15 time frame. Then the procedure of analysis. We are not going to delve down in market maker level counting. It's actually it will actually take a course to fully understand how to count these levels properly, and it's also included in the upcoming trading training on the 28th of June. Then point of occurrence, this particular M pattern occurs on the H1 level 3 peak, right? So at H1 level 3 peak, we mean we need to have a complete cycle and have this at H1 level 3 peak. Then time of entry, it will be during London and New York Open. So we only take the second leg of the M pattern. In this case, we actually take here, and it should occur either during the London or the NY opening. So in this case, we are saying the M pattern should have at least equal leveled legs like this, or one leg above the first leg like this. We don't take something like this. Then to fully imprint this particular pattern in your mind, below are now the flashcards for this pattern. So here's the first example. In this case, we had 1, 2, and 3. At level 3, we had first leg, right? After first leg, nothing came back to the same zone, right? And the market went down and it came back to retest the same zone. At its retest in the M15 time frame, that is when we start to look for entry regions, the railroad tracks, any candlestick reversal pattern within the zone of the first leg like that. Then we are good to go. We take our profit. The profit should as well be defined by a trading plan. Is it 50 pips? Is it 100 pips? Is it a swing trade? And so forth, right? Example 2, I've just taken from example 1. You can see from this point, we started to count another 3 levels, which was issued. We had 1, 2, and 3. And at level 3, that is when we expect this particular pattern. We can see first leg and second leg actually retesting the same zone like that. And candlestick reversal pattern on the M15 time frame in this point was going to give us an entry reason, and the market went up like that. Then this is example 3. We had 1, 2. All these examples are actually derived from euro against Australian dollar. You may go back to see how all these worked out. And in this case, we can now see that we had the first leg above the second leg, and we have defined from our previous criteria that these particular patterns can come in this form, and it will be also good for us to take a position in this long trade. So focusing on this particular pattern will actually give you more odds of winning over a series of trades. Why? You have the same rules. The market will spin, the market will fall, will crash, will do everything, but it will definitely offer you the best setups that can return all losses that you would have incurred through the reward to risk management. So in this case, we come to the end of this video. Thank you for watching. Like and subscribe, and check out our free Telegram channel. This is the link, and I've put it down in the description box below. See you on the next one.